Yo, what's up guys? It's your boy Looney, and today I'm breaking down my top 3 stock plays right now, along with the exact strategy I'm using for each. So whether the market feels overbought or you're sitting on the sidelines, this is how I'm staying in the game without getting wrecked. Real quick, shout out to the Discord. It is free to join, and I also run a premium membership, $8 a month, and with that you get one-on-one coaching, trade callouts, and a option selling course, and I have some giveaways and more. You can check it out. All the links to that are in the description. But let's look at the first stock that I'm investing right now, and that is Robinhood. As of now, I am investing $2 a day into the stock. Robinhood is consistently beating earnings. If you go down here, it is beating or meeting earnings almost every time. The past 3, it has done very well, and I'm very curious to see how it does this quarter, and it should do very well. It is also being innovative. We saw the blockchain going on in the crypto space. They're doing retirement. They have the mortgages possibilities, and there's just so much that they're building on Robinhood that it seems like they're such a competitor that it's hard to just sit out on this stock. I am bullish long term, but I'm still a little cautious, and that's why I'm only doing the $2 a day. And because we're in a hot market, everything seems like it's pumping, including the stock and other small caps or even crypto, and it just feels a little bit overbought. So I'm playing it a little safe. That's why I am doing this amount. It's not a lot. It's very small daily buys, and it keeps me in without FOMOing in. So I'm not going all in. I'm building a small position. When there is a bear market, that is probably when I'll start investing more heavily, because every stock does well in a bull market. Or maybe not every stock, but most stocks do well in a bull market. So I'm very curious to see how this stock does when things aren't so good. And this one actually follows crypto pretty closely. If crypto is struggling, Robinhood often follows because it is a volatile stock and they are involved with crypto a lot. But that's my first play is Robinhood. I think it's a great stock. It's a slow build, but that's how you win long term. It's just building a portfolio over time. And maybe one day we'll see this stock go into the S&P 500. But you can see year to date up 170%. So although there is room for growth, I'm still a little bit cautious because this trend can't just go up forever. Unless it's like Palantir, which it could be. And if it is, then I'll still make a gain, just not as much as I would if I were to go all in, which I'm okay with. Now, the next stock we're going to pull up is Oscar Health. Now, I've been covering this stock for a little bit now, and I'm not just buying shares outright. I'm actually selling cash secured puts. So the stock has been crushed a little bit lately. It's down 30% in the past month. And it has a lot of money in cash. It's $2 billion in cash, and there's a lot of institutional ownership along with other strong fundamentals. So although this stock has had recent headwinds and the weak guidance and just overall ACA subsidiary fears, I'm not running from it. I'm simply just selling puts and collecting that premium. So I did one at $15, and this is back on the initial drop, and since then it's dropped a little bit more, so that's why I'm selling the $12 all the way down to $10. So I'm actually dollar cost averaging with selling options, and I'm building a position that isn't too big. I mean, 5,000 is it's a decent size in my portfolio, but it's not the biggest. So I'm okay with owning 400 shares at these price levels and having skin in the game. So I am building this one for long term as well. And if I just get assigned, I'm simply just buying it at a discount. And if I don't get assigned, if the stock stays above these strike prices, I get to keep that premium. A lot of these had really good premiums, so I was able to get around a 4% return with each strategy. So that's a really good monthly return if these stay out of the money. Now, unfortunately, or in my eyes, I think it's fortunate that I will get assigned. I'll probably get assigned on the $15 put, but the other ones, I'm not entirely sure. But even at $15, I'm okay with owning it. Even if I'm in the red for a little bit, I'm okay with just that short-term volatility or that short-term loss, and just wait for it to finally grow, finally get earnings to come out, and actually start to rise. And I'm also waiting for red days. So this stock did have a struggling week, or the week actually was up 7%. So I held off on doing any cash secured puts. But past month, when I saw these dips, is when I got into selling more cash secured puts. But we'll see. Might do a little bit more, might not do any and just hold off. But for now, I'm just simply keeping what I have with Oscar. Now, the last one is one that I had a full video on pretty recently, and that is Figma. Now, Figma is having its IPO listing, and through Robinhood, you can actually request to get shares before it gets released to the public, because Robinhood gets shares, and then they're able to give these shares out to their customers. So me and myself, I did a queue. I requested 100 shares through the Robinhood Access, and I did it just looking up the stock. You can find other ways to get this request, but it's very simple. It's either you go to IPOs or you just look up the stock itself. And I requested it, and it has this buffer, this 20% buffer, and it kind of tells you why. And hopefully it goes through. Last time I did this was with Circle, and I didn't get filled, but at the same time, I only did 14 shares. This time I'm doing 100 shares. So if I don't get all of them, that's fine. I'm okay with getting a portion of the shares, but I do like this stock. I did the research. It is a cloud computing or AI powered platform, and you can read about it here. And there was some news that came out with Adobe trying to acquire it, and that fell through. But even through that, they were able to prosper, and now they're actually becoming their own individual IPO. So very excited to see where this one goes, and we'll see. We'll see if I decide to sell as soon as it's listed or just hold it for a little bit. Not too sure. I do know there's some rules with selling on the first day that I think you can't get involved in IPOs for a little bit if you do that. So we'll see if I decide to sell these right away or not, or even if I get filled. If I don't get filled, that money comes back to me. So I'll get $3,000 back into my buying power, and then I could use that $3,000 to invest into something else, or maybe still invest into Figma if it's at a price that's appropriate, but we'll see. So again, if I get a fraction of this, I'd be happy to hold and just let it grow over time. So that's really it. But other than that, I'm still investing in other ways. I have crypto and I'm doing covered calls, but those are the 3 stocks that I'm actively investing on the daily. And just to recap of everything is I'm DCAing into Oscar, or I'm DCAing into Hood for long-term growth, doing those daily buys. And I guess I am also DCAing into Oscar, but I'm essentially just selling puts on Oscar for discounted entry and just that passive income. And then the last one is just positioning for Figma's IPO with what I think is a good stake and a good sizing for my own account. All these are pretty different strategies, but they're all focused on discipline, value, and opportunity, and just risk. They're not all about hype. And if you're building with intention and not chasing every green candle, smash that like and drop your current top stock in the comments. And if you want my real-time moves, check out the premium Discord. Links down below. Peace.